Today is Friday, May 7th. Welcome to episode 15 of Fish Wrap TV. I'm your host, Janie Hansen, filming live here in Blue Earth, Minnesota, as usual, with Q Lair. The markets this week have been anything but usual, right? The big topic today is drought. We'll get into what the drought in Brazil means for the corn and ethanol markets, talk a little bit about crude oil, soybeans and soy oil, and canola, along with wheat and the drought in North Dakota, and along with what's coming up and the frequently added topic of the lumber and copper markets and the recent jobs report. So let's get after it.
Okay. Well, we had a pretty wild week this week yet again. And, you know, to give everybody a little hint out there, this usually is a harbinger of an enormous trade this summer. And what I mean by that is wild, volatile, and who knows what's going to happen. First up, we have to talk about the drought in Brazil is intensifying on the safrinha crop. There's already talk that they've lost 6 million tons of corn off their 109 metric ton crop, 103. I would be surprised if they haven't lost a little bit more, but we'll know next Wednesday with the WASDE report. So at any rate, if you look at the safrinha crop concerns, the right map shows exactly what the problem is. And that large block, which is called Mato Grosso, at the upper left of the gray area is essentially the size of the I-states. And they grow a ton of the grains in the Brazilian inventory. Now, what that means is that that is highly drought intensive right now. On the left, you see it looks just like our drought monitor. You see the browns and the yellows and stuff like that, which means, you know, the drought is intensifying, and we do not have forecast for any rain for the next 2 weeks in the Mato Grosso and the growing areas. This reminds me so much of, you know, when you get a high pressure dome locked in against a jet stream, like in '88 when all of the storms moved north of the Corn Belt and we were just stuck in a high pressure cell. And that looks like what they got here. And this is the first time we've had a major one in Brazil. But, you know, this is heading into their critical growing period for safrinha corn. We do not have the same situation for the United States at the moment. But the next graph will show you, you know, this is the Midwest. This is where the vast majority of the corn is grown in the United States, outside Nebraska. And, you know, that doesn't count because that's, you know, coming out of the Ogallala. But as you see, we've got a couple of tight areas. You know, Iowa has lost the red, so even the Midwest is starting to look okay. What this means is that this is the ultimate for a United States farmer, because we're going to be able to grow corn, and instead of with a 3 in front of it, we got a 5 or a 6 in front of it because of what you just saw in that Brazilian map. Mm-hmm. And this has happened 3 times in my career. 1975. With the Soviet Union, when they just had a complete failure of their wheat crop. They had to come buy it, and it went exploded. And then, of course, you know, 2010, when Russia had a huge drought out there in the steppes, and they had to cut off exports, and we took corn back up to the 7s that year. So, you know, these are situations where if you look at '88 drought, '83 drought, '08, you know, we had problems with the United States. This will be the greatest thing ever if we can produce our usual crop at these prices, courtesy of Brazil. So, you know, it goes back to what we call, you know, the farmer's prayer on Twitter is, you know, Lord, kill everybody's crop except mine. And, you know, that's where the United States is sitting right now, because, you know, Australia just had probably the I think it was the second or third biggest wheat crop they've ever had. But this La Nina has really, you know, set this pressure cell over Brazil, and it is looking bad. And 6 million tons, I mean, it's 240 million bushels. I mean, it's not super big in the grand scheme of things, but, you know, you're starting to knock off margins on the carryouts, and the numbers are getting smaller and smaller, especially with beans being tight this year. So it's it is pretty wild. And but what that also does is brings us to, you know, what they call king corn now. and we've gone from king beans to king corn on Twitter. And as you can see from the graph here in the corn market, this is D's corn, another shot up today. And remember, Janie, we were talking about the consolidating, the moving up. Here we are. I mean, thing is that make me think I'm a technical trader listening to me talk about this stuff, but it's pretty much anybody who's been around the block a few times knows these things when it comes out.
Mm-hmm. Well, we just finished up planting on our farm this morning, so crops are getting in the ground, and it's bright, sunny, clear blue sky here, but we could use a little shot of rain. That's for sure.
It's a bit dry, but yeah, we're in no danger at all. Of course, we're not even into any heat yet to speak of. So we're also heading into hurricane season, and everybody better watch out, because all it takes is for one hurricane to hit west of New Orleans and come up the pipe, and all this drought's gonna be gone everywhere.
Yeah.
Up here, I mean, gone. And it's sometimes you just got to say $7 is enough, $6 or $6.50 is enough in the crop and stuff like that. But people are not talking about $8 corn, $10 corn, all-time highs. And I go, oh Lord, here we go again. But the fundamentals don't bear it out. We're starting to see some supply destruction. Although today we had something very, very interesting happen. Remember, I told you 2-3 weeks ago that the commercials have let this thing go. They're going to make people pay up. The Chinese bought 53 million bushels of corn today, up 30 cents from just a couple sessions ago. So that's 53 million bushels, 1.3 million tons. It's the 7th largest buy. So what they're doing is they are putting the hammer to the buyers. And of course, Mexico, bought a couple of cargoes, a couple days ago, pretty much up there too. So it's really, this game is playing out the way we see. I don't see where the top is yet. I don't get the feel for it yet.
Okay, so what is the market telling us? Is it giving you any indicators yet?
The thing is that what's going on in the other markets you and I talk about has got everybody scared shitless. I'm serious. I mean, they saw what happened in canola, and they saw what happened in lumber and stuff like this. They're scared to sell this stuff. And the farmers are laughing all the way to the bank, but as we always said, you can't laugh until you got it in the bank.
Right.
Not about the other thing.
Yeah, and that's what we've been talking about, how aggressive to get on our sales on stuff, because now the crop's in the ground, so that's step one on looking at your risk profile, but when to start getting more aggressive on waiting for that emergence and seeing what sort of line of sight on the crop you'll get.
What's that and stands, how it's coming up and everything else. So, that's what the agronomy people are here for. We're just showing what the price is right now per bushel, around the world. So we will see. And, people are greedy. And you know what that means to me? I'm just looking for a place to sell it to them.
Well, mantra, greed and fear, that's what drive the markets.
Exactly. So at any rate, I guess just as a quickie here, Croptimize for the 2020 crop is going to go live on Wednesday after the WASDE report.
Okay.
We're going to learn a lot about what's going on here, because the May report, as everybody knows or should know, is that is the first report where we have 2021 supply demand crops. So this is where the USDA is taking a first cut at all the wheats, corn, and beans, and then we'll see what 2021 is looking like. Because what they've been doing now is they've been trading 21 into the future, but yet 20 has been where the S&Ds and the carryouts are looking at. Now we're going to see what we're going to be carrying out, a year from now, year and a half from now. Yeah. And it's going to be very, very interesting. I was hoping to get Croptimize fired up and running on Tuesday, but do not trade into those reports.
Yes, those words, I remember those clearly from last report. So back to the, for helping farmers time, when the market is telling you to sell, that's what Croptimize, that'll kick off next week.
Exactly.
So we'll have the first update on that next week. So tune back in, maybe do some Q&A afterwards for what's going on. To
discuss what the model is seeing and where we're at and why we're doing it. And it's going to surprise a lot of people, because the model, I'm using a new what I call fluid frame to do this thing, and it's going to be very, very, very interesting when they see what we're going to be doing here. So, not to toot this too much, but based on where we're at, this is going to get really interesting real quick.
Mm-hmm.
So,
and then looking out to the out years, any changes out there in 22, 23, 24?
Well, I tell you what, ready for this?
Yeah.
Okay, these corn hit 636 today. Okay, rumors have it that corn was bid $8 at St. Louis for one barge.
Whoa!
Somebody has got what in a
Somebody's got a problem.
Somebody's got a problem. D's 22 corn 525. So we're right at that 530 where you're looking at $5 cash at worst.
Yep.
D's 3 is 459, so it's inside. We got to start
start paying attention there.
Absolutely, because you can't let 455 go in 23, and of course 438 in 24. So even that's creeping up.
Yeah.
So the tide is rising, the boats are rising, the spreads are getting nasty. Remember last week I was telling you July East corn was at $1.16, closed today at 96. So 20-cent move in a spread, get that on you. And it was just a brutal week. Corn volatility went to 40%. It's usually 20-25. So it's
volatility. I noticed that in the margin calls.
Yeah, margin calls. So that's why we're drinking Malbec here.
Right. Well, I just got back from the bank from doing that, so good times.
Well, and the thing is that this is what we're going to get into is the psychology of oh my God, I sold too early. Oh my God, this. It's just like forget about it.
Yeah, just hold that. Made a good decision.
Yeah, I don't know what there used to be some Madison Avenue. Set it and forget it. I don't know what the hell product it was, but I chose on Madison Avenue so good. Set it and forget it.
Remember the tagline, but not the product.
Exactly. But it's really if you've got that money in the bank, then you could begin to run your financial systems. And from our standpoint, that's more important than rolling the dice. Coming into this crop.
Yeah. So it's like differentiating between what should you do for your base, for your risk management, and then if you want to roll the dice on some of your upside production, have at it. But to know what you're doing and not betting the farm.
Exactly. Literally betting the farm. And of course, they call it king corn now. That's when all the crazies come out. Is when they think it's king corn. So ag Twitter is almost unbearable, but yet I'm sticking around doing my job for the company.
Yeah. So, moving on to ethanol or crude, what's going on?
Well,
there
ethanol
in the fuel markets.
It's very, very interesting. Crude finally broke out on the upside. It's back up in the 65, 66 area. Ethanol is continuing to run. Something has to give. Something has to give. And there's your ethanol chart, and of course, you saw the flag. Now let's shoot up against that. But also what's really interesting right after this is next up is hogs. And you say, what the hell's hogs got to do with this? Of course, they eat corn and beans. But look at this. You got a situation where, China is buying all this stuff. And, lots of animals, lots of, they're just loading up the boats as many as they can get. What this means is that, you got to be very, very careful about hogs and cattle coming up the next couple of years because just like in 2012, everything shot to the moon. They weren't going to pay $7 to feed, hogs and cattle anything, so they just sent the herds to the locker. And then, of course, the next year we had an explosive, huge rally in the animals because they just went to slaughter and weren't replaced. And that's what I'm going to begin to start watching here is the hog market. And God, I cannot believe I'm doing that because I swear to God, I was never going to work in the Merc. Because I was a true board and trade person. Yeah. And it was just like, well, you go work at the Merc. No way.
And here you are.
Yes, here I am. So at any rate, we're keeping an eye on the hog market for all of you. And, one of these days, some of this is not going to work. Something's not going to work because you just can't have hogs rallying with corn going, through the roof as well.
Yeah. Well, and how about the other one, beans?
Well, beans, after having, pretty much owned the spring, have stepped to the background. And I guess the war is now that corn is trying to buy acres back away from beans. Okay. And that's what's going on now. And I think I was reading on Twitter the other day, and I'm sure the number's correct. They went from about 2.7 in the bean corn ratio to about 236. So they've taken a chunk out of that with this corn rally. Beans are still tight. I mean, very tight, and it's because of oil. And, that is going to be the kiss of death one of these days. It's just, how long is it going to take before you can stand in front of this freight train and it won't run you over because of oil. And because, meal is starting to show signs of just, it's like the boulder that they're having to drag with them as it goes up. And, canola, oh my God, canola hit 1,000. I saw a guy on Twitter today, he's from Canada, he says, I got no idea where it's going.
Yeah.
No idea. And I say exactly the same thing. I got no idea where this thing's going. And I mean, I've got a gallon jug. We can make French fries at home. It's just like,
hang on to that.
Well, it's just like, we got to protect our lumber, all of our copper piping. Now, my gallon of canola oil, it's just like, holy Christ, they're going to come get it all and clean me out. But, of course, and then the oil chart here, ZL, this thing just is just a rocket. And, I've seen this a couple times in my career, but it's just like everybody's just dreading. When you're crushing beans for oil, it's just like, oh my God, what are we going to do with the meal?
Yep.
But this thing goes.
The pile keeps building.
Yeah, the pile keeps building, and, something has to give. But yet, these markets tend to overreact before they have to adjust, and they have to do something about it. So, anyway, and let's see, what are we talking about next?
Wheat,
my fave.
Yes, welcome back.
Well, wheat's coming. Wheat's coming into harvest. It is. This is about as interesting a year that I've seen in quite a while. And we've got $7 wheat up front on the board in Chicago. The other thing is, and people don't realize this, wheat corn, Dees, it's traded at $1.30 or $1.20. I'm sorry, $1.20 wheat over. So what that means is wheat has bought acres away from corn.
Interesting.
Yes, because the Julys are about 30 over, but the Deeses are $1.20. So that shows you how the spreads have exploded in both markets. But what that means also is that they are not going to plow this wheat up to put corn in. What they're going to do is that's what I would do, is just run beans over the top of it and take a shot. See if you can get some beans done with your wheat crop. Because I mean, we're looking at 762, coming right up in July here in the teeth of harvest. 2022 is 716. So you got 7 all the way. You got 7 for 2 years out on the board, and then 663 for 2023 wheat. So these are better numbers we've seen in a long time. The drought is intensifying up in North Dakota, which has got me this is the one thing I don't want to do, is mess around with spring wheat in a drought. And SEP traded 803 today, $8. So that's new crop spring wheat, and then SEP 2022 is 706, so it broke through $7. And thing is, the stuff's barely in the ground. We got an 8 in front of it, so it better stay tuned for this, because what may have happened this year is that red wheat led the way and never gave up, and the hards are coming. Okay, so I'm going to watch the spreads to give you guys an idea. July is trading at 46 over. Okay, 2 years ago, July 21, July 22 was negative 50.
So it's almost a buck swing.
Yes, in the spread.
Yeah.
The year spread. So, people say, how did you guys make money trading spreads? Well, that's how we did it. Because, I mean, that was sitting a full carry. I mean, hell, I would have taken delivery of that and just, just told it, just send me the check. But, when you got carry, you're going to pay that. The volatility is starting to pick up. And this is the time of year. And like I told you before, I made 70% of all my money trading between Labor Day and Memorial Day, starting Memorial Day and ending on Labor Day. So this is where the big boys, the big traders,
getting to game time now.
But this is game time. So, and we're still early, because usually, May 31st comes in, and then we really start rocking in, June, July, August.
So yeah, then anything else on the grains, or?
Well, outside of canola, it's just like, who knows? I mean, we could have a situation here where this is like, Minneapolis wheat in 2008, where we had no idea where that thing was going.
Yeah.
And if you'd have told me when it was trading 18, it was going to go to 25, I'd say you're out of your mind. Of course, it did it in like 5 seconds the next day. But, it's just one of those things where they have got to clear the market because whoever short this thing has got a big, big problem. And we're not talking, I mean, this is way beyond seeing God.
Yeah.
Okay, this is toe tag territory. So, I mean, you're either going to have to get out or they're going to force you out. And then, just like that guy lost $20 billion, from his what do you call it, family account. Yeah. Lost $20 billion. Specking the stock market. Yeah. This could be something that takes a lot of people out.
So, and then how about the building materials, lumber and?
Well, I tell you what, lumber hit, ready for this, $16.70 today in the July.
Wow.
May is almost off the board. May was higher even, but there's only like 25 or 30 contracts open. God knows what you're doing short this stuff in May. How'd you like to be short May lumber in May in delivery with no limits?
Yeah, bad news.
Bad news bears.
Yeah.
But 1670, and we keep saying numbers. It's crazy because we were talking just 2-3 weeks ago, it was 1,000, and here we are, 60-70% higher. Yeah. Copper, putting out new highs in Europe, trading at 5,000 a ton, which is, $5 a pound for us, $10,000 in the contract in London in LME, and of course we're trading 475, which is way up there for a building material like this. So it has gone beyond FinTwit and AgTwit. It's gone beyond the fact that the Fed has lost control. It's just how bad has the Fed lost control, and they're starting to talk about 1970s and Jimmy Carter with what's going on now.
Yeah.
So,
and then the jobs report.
Oh, disaster. Absolute freaking disaster today. They expected 1 million new jobs. They got 276 or 267, one of those two numbers. Yeah. I mean, a 70% miss. Think about this. Biden, in spinning it, I guess, how bad this thing was, says, well, we may need to spend more money. And what does that mean? We're what do you call it? Pushing on a string here pretty soon.
Yeah.
You got more money chasing lumber. You got more money chasing copper. You got more money chasing gold and corn and everything else. And it's just, this could get way out of control sooner rather than later if we don't get somebody in D.C. that gets their, SHIT together. Because the thing is that they're looking at 6, 7, 8% inflation in a lot of things. I mean, coffee just broke through on the upside, for God's sakes.
Yeah.
And it's gone up 50% in the last 4 months. And that's not even on the blip.
Right.
Of course, that'll kill us coffee drinkers.
Yeah.
But crude oil back up 65, so it's building power between 60 and 66, like we talk about every week. It's consolidating, building power, probably going to go up through it. Just like when it comes in, consolidates, goes out the other way, same direction. So what that'll mean is if we get $70, $80, $90 crude oil with interest rates going up and jobs going down, this could get ugly. And all you youngsters, I was alive in the 1970s. I was alive when we had 21% T-bills and we had 11% inflation and we had 10% unemployment. I mean, stagflation. I mean, I lived through it, and you guys do not want to live through that again. And I mean, they're pushing this nonsense, and it's getting there real fast. And the market reacted violently in the stock market with this jobs report.
So, well, any other closing comments for this crazy week in the markets?
Well, I'd say, what I want everybody to think about is that the markets are really going to get serious and trading seriously in July. Okay. And we've you say, well, this has been crazy. You ain't seen nothing yet.
Wait for it.
Wait for it. Exactly. And I think just stay tuned. Keep, I think this is where, what we're doing with, Crop-Demise and Farm CFO is pick your points, sell it, set it and forget it. Kind of a thing. Because this is going, 40% volatility in corn. This can go to 70 in no time. And, back in 2012, the margins on corn were $2,500
Mhm.
per contract. They went down to like 900. Remember?
Yep.
And now they're back up in just over 2,000 now. So
Yeah, back in that range again.
they're starting to ratchet up the pressure from the CME group on people who want to spec this thing.
Mm-hmm.
And of course, lumber that went up like 10% in margins. I mean, they're just sending those guys to the rack.
Mm-hmm.
And same with copper. It's because you got 300,000, 400,000, 500,000 contracts of this stuff.
Mm-hmm.
This is serious business.
Yep.
Especially with copper.
Yep. So, well, next week we'll be talking WASD, the start of the Croptimize model.
Mm-hmm.
But in the meantime, happy Mother's Day to all moms out there, and we'll see you next week.
As Rizzo used to say for the New York Mets, he would say, "It's Mother's Day. Happy birthday, Mom."
Yeah. All right. Thanks again, and we'll see you next week.